focus today on Your World at 10 is going to be currencies. What will 2014 look like for major global currencies? To try and spot a trend, I have with me Anezka Christovova Forex Strategist at Credit Suisse, and she joins me from London. Anezka, welcome to the show. Let me start by asking you what you think was the currency of 2013. Would you pick the dollar, or would you pick the euro as the currency of the year gone by?
I think perhaps the euro. Many market participants were very bearish on the euro during the year at various moments, and yet the euro managed to defy all these bearish expectations through the year at various moments. So I think the surprise was the euro.
Anezka, where do you see the euro headed through the course of this year? Given the cutback that we're seeing in quantitative easing by the Fed, how will the euro measure up against the dollar? And I think the question that needs to follow that is, if we continue to see the strength we have in the euro, how much of a concern is it going to be for the ECB, given that a stronger currency could compromise the ability of peripheral European countries to recover?
Yes, I think as we move into next year, the theme to focus on should be monetary policy divergence in the G10 space, in our view. While Fed on the one side is moving towards reducing the exceptional amount of stimulus, on the other side, we think the ECB has not done enough yet. Well, we can focus on the central bank specifically. We think what is important to focus on is the underlying economic performance. So on one side, we have the US economy, which in our reading has actually been exceptionally strong if one considers the amount of monetary and as well as fiscal tightening it actually experienced over the year. So considering that, it was remarkably resilient, and as we move into next year, we expect the economy to perform strong. Well, the Fed is likely to try and delay any tightening expectations. The data may call this perhaps unreasonable, or the market may soon start to question whether that's the right policy. Now, on the other side, we have the ECB, which in our view has not done enough yet, as inflation momentum is pretty weak, and the economy is still facing a lot of issues. As you mentioned, the peripheral economies are in a not great situation, as well as the banking sector may prove a further drag on the economy. So looking at the exchange rates, we think that sort of divergence will prove key for next year, with euro-dollar moving down. Now, having said that, there is a certain, on the Fed side, we feel a lot more confident on our view, but ECB is a hard central bank to read, but we would still expect it to have to deliver more over the year, pushing euro-dollar lower.
Well, some of the economists I speak to, Anezka, seem to suggest that maybe the ECB does need to do more, as you've suggested as well, and that negative deposit rates is, amongst the ammunition that it has to be able to help stimulate further some of the peripheral European economies along with the rest of the Eurozone. What can we expect happen with the ECB over the months to come, even though I know you've said that's a central bank that's difficult to read?
Yes, so the timing is perhaps uncertain, but we certainly think that negative deposit rates are in the toolkit of the ECB, and perhaps the next thing to do once it reaches its threshold for more action. There might be more things on the way on the liquidity side, which obviously will matter for the exchange rate as well. One thing we are expecting perhaps as possible in the near term is to stop the sterilization of the S&P program. But as a more significant step, we would expect the negative deposit rates. Well, moving further into the 2014, the one thing which is quite uncertain but not totally out of question is a form of QE. Not our base case, but certainly something we would focus on if the data start coming a lot worse.
And what shape and size would this QE take?
I think at this moment it's rather a question of yes or not. I think we are not yet in a position to.
So when you say QE, are you referring to, let's say, another OM? Are you referring to the operationalization of the OMT? Are you referring to some, further addition of the LTRO? What exactly do you mean when you say that we could look at further QE by the ECB?
I didn't mean further. I mean QE as a measure. As a sort of similar measure to as other major central banks have employed, that is just buying government debt and printing money in that manner. They have not done it yet. I don't think the word further would be appropriate, but just as an additional step if the economy proves a lot worse. As I said, it's not our base case at the moment, but we don't think it's totally unacceptable for the ECB.
At what level of the euro do you think the ECB will be forced to act, whether it is, reducing interest rates on deposits to negative, or even considering a QE program for the first time, as you seem to suggest?
I would say that the exchange rate would not necessarily be the trigger for such an aggressive measure. To look for such an aggressive measure, we would really have to see a deterioration in the data. Now, if the exchange rate moves higher, we've been in that situation a few times, and what is the choice at that moment is simply just a verbal intervention. Confirming to markets that such a strong exchange rate is likely to change the inflation outlook, and on that basis, the ECB would consider further easing. But the link there is really through impact on inflation. At past, it's been various levels where we've heard these comments from the ECB, but certainly around 140, that's been the level we've seen it in a lot of occasions.
All right, so let me put a final question to you then on what you expect from the dollar in 2014, and equally what you expect from the yen, because that's the one important currency that we haven't touched upon yet. And there is expectation that Abenomics will help keep the yen weak. We've seen clearly a solid weakening in the last couple of weeks, all the way to the 105 level for the yen versus the dollar. Where do you see both those currencies in 2014?
So dollar is really our favorite for 2014. We think the theme of monetary policy divergence, as well as stronger economic performance from the US economy, are likely to support the dollar through the year. Now, looking at monetary policy